So you're passionate about personal finance, entrepreneurship, and making money. But do you know and understand these 8 different types of income streams? What's going on, guys? Chris Robinson here. In today's video, we will be going over the 8 different types of income streams. So be sure to take this moment to smash that like button and subscribe to the YouTube channel. Thanks. Number 1, earned income. This is probably the most common income stream you will know and understand, because if you have ever had a job, or even if you're self-employed, you are making earned income. This is the money that you earn for doing something, or money that is earned by spending your time earning it. Number 2, profit income. If you have a business, you are probably more familiar with this term. When your business revenue exceeds all of your current expenses, including taxes and operation costs, you are making a profit income. This is the money that is earned by selling a product for more than it costs to produce. For example, if you are selling a shirt for $20 when it costs $12 to produce, which also includes your taxes and other fees, you are making an $8 profit for every shirt that you sell. Number 3, interest income. This is the money that you earn for lending out your money. In other words, an investment. If you're an investor or a business that lends money, you are more likely to see an income like this. For example, if I lend a friend $1,000 to help start his business, but ask him, and hopefully it's in writing, to pay me $1,100 after his first year of being in business, this is an interest for me. However, there is a specific way for calculating interest on a loan, so I suggest that you watch my video, APR versus interest rate, to better understand the terms and calculations. Number 4, dividend income. Dividend income is defined by the IRS as any distribution of an entity's property to its shareholders, which is in fact taxable income. If you don't know what a dividend is, this is the profits paid to shareholders, typically on a quarterly basis. Let's say, for example, that a company earns $1 billion in net profit last year and chooses to reinvest half of that money into the company. The company is doing so well that they decide to use the remaining $500 million to pay out dividends to its shareholders. You can simply look at this as your share of the cut when a company that you have shares in make a profit. Number 5, rental income. This income is self-explanatory. This is the money you earn for renting out an asset. Most people think of homes and buildings, but this can be income from anything ranging from cars, tools, and even electronics. Number 6, capital gains. When the value of something you own increases, you can look at this as a capital gain, because this is the money that you earn from assets that you own that increase in value. Real estate, stocks, and bonds are the most common for capital gains. However, there are many other things that have capital gains. For example, the fashion industry is experiencing a lot of capital gains when a trendy retail price of clothing and shoes increased by hundreds and even thousands of dollars in the so-called aftermarket. Number 7, royalty income. Royalties. You may have heard a lot of entertainers or even creative individuals refer to this term. Royalty income is the money you earn for allowing others to use your property. When I say property, I'm not referring to real estate. However, I'm referring to other things like copyrights, patents, and etc. And number 8, residual income. Just about everything on this list but earned income can be an example of residual income. This is the money you continue to earn after the work is completed. But wait, you're probably thinking of what's the difference between residual income and passive income? Well, they may seem the same, but there are, in fact, some differences. Passive income is usually the money you earn for no direct involvement, whereas residual income is the remaining money earned after the labor has been done. Residuals is a form of passive income because it's continuous income after completed work. However, it cannot just be seen as revenue. It has to be recognized as the net income or profits. Alright guys, so I hope you find this video helpful and an enrichment to your knowledge. If you find this video interesting, you may want to watch some of our previous videos. So don't be afraid to subscribe so that you can stay up to date with all videos related like this. And I see you guys in the next one. Peace.